Hello traders, Nick here looking at, what the heck am I looking at? Not BMY, I just did that, Johnson. Okay, I'm running through a list. So today is still 8/16, 2019. And Johnson & Johnson, great company obviously, well, recently tarnished from the talcum powder thing, but I still think it's great. Everybody's allowed to flub here and there. 20 PE, 21, 22 PE, 4 times sales, 5 times book. Not crazy cheap, but not crazy expensive. They do pay a dividend, and it's a hefty dividend too, relatively speaking, to what yields are anywhere else. So even though the company, quote, has hair on it from some lawsuits and stuff, it's still an icon and a staple, and I would own it for the long term. If the stock markets are going to be higher in the future, most likely this one will be higher, and it probably has a floor just because of its financials, so, and its business. What now? This is a knife I could catch, because if you notice here, the last few days, this daily chart, last few days where markets are falling out of bed. Let's see here. The S&P is falling out of bed, big chunks every day, every other day, up, down, up, down. This one is somewhat rangy. So that's good news, meaning that they've chopped off as much as they could out of it. Like here, whatever headline that was, this might have been market-wide. This is probably specific to it. This is definitely specific to it. Looks like, maybe not. Anyway, so there are some good solid bounces that I can bank on. So from a trading perspective, if I don't know or I don't want to consider the fundamentals, or once I say, okay, I'm okay with the fundamentals, let's look at the technicals, what am I looking at? I'm looking at a couple of things. I did add this as a cautionary tale a few days ago, that if they lose this, they might come down here. But that was because markets were falling too. I didn't think it was going to go on its own. They came back to it again, tested it, and bounced off of it. They came back to it, tested it, and bounced off higher. So higher lows, let's see. They tried to break out. They tried to break out a little bit higher. Higher lows, higher highs. Is that developing like this? Is it? I don't know. We can watch it. All I know is there's a neckline right here. I just put this, that if it's beaten, then there's a hurdle overcome. With a moving average as well. So there's a hurdle overcome, and then if they can close above it on a daily basis, this is a daily chart, then the bulls can decide to, okay, maybe I can step on that level and start building it up. So use it as a floor, some sort of support. So why do I pick on this level? So I'm going to extend it left, and I bet you it's going to hit something important. There's one. Yes, this is a big candle, but this is like a level that comes into play again. And then I extend it left. Look at this cluster. These are days, like what, a week and a half of right there. Every candle is right there at the bottom. I'm going to go left. Boom. Look at that. This is very emphatic. So this is a cup and handle-ish, right? The bottom line is there was a neckline that breached, and then they tried to hold it. They fell through it. They recovered it. They fell through it, and they're coming back at it. Onus is on the bulls to take it back. So for now, I can put R on it. So I don't want to be long the stock unless it's above it. Why? Because I'm okay missing these unless I'm a fast trader. Then it becomes a different conversation. So from a fundamental perspective, if I'm looking to trade it at least 3 months out, or 6 months, or 2 months even, I'm okay missing this because I want to see what happens here. This is now resistance because it just is. Until it's not. Just like this is support until it's not. So I don't trade it inside of here unless I'm a fast trader. So I wait either for it to break out of here or break out of here. So if I'm long it, I don't get out of it until I lose this level. If I'm looking to go long it, I don't want to chase it until it hits that level. So there is a way to circumvent that and start making money right now if I believe in this level. This is the Christmas crash. Everything was gone to crap. Everything in the stock market. And this is the best they could do, the bears. So if I'm okay owning it here, I can sell puts below here to generate income out of nowhere, or credit put spreads. What does that mean? If the debacle doesn't come, I made money. I don't need a rally to profit. So I'm not chasing. I'm pinning a level. I'm saying this is safe. I'm not marking this X. I'm pinning my personal level. So now I will share a table with whatever premiums are available there to sell with members. If you're not a member, then hit me up. Maybe we can work something out there. So I'm looking left. Continue on looking left. Significant level, right? Support at that time. And then something happened here, so now I have to extend my time frame to see what's going on there. It's still significant. So any which way I slice it, this is a line that sticks out. All right, I'm going to minimize it. Now this is a daily chart. I'm going to switch, same chart, I'm going to click on weekly. Same exact company. This is that blue line we were looking at. This is where you're at right now. That's that orange line where I drew. I said this is significant. And in fact, it has been significant since 2017. This one right there. So if I eyeball it, there's just as much action above it as below it. So it's literally the pivot. Now, over 5 years, this is the point of control. So it's not going there, but you can see that there's plenty of room to fall. So this was the Christmas crash I noted. Look how important that turned out to be. It's not a coincidence. So let me bring this back up here. I'm going to get a new picture. So now we can discuss the weekly technicals to see if they agree with whatever we just said on the daily. I said, if this happens, this could come. And if I'm okay owning it here, why here? Because this was a Christmas crash. Oh, by the way, look at the volume on the Christmas test. So this candle came into, these are weekly candles, into a legitimate test. This is a lot of volume. Looking left, there's nothing even equal to it. There's a spike here, but a lot smaller. There's a spike here and a lot smaller there. So this is two weeks, 2 solid, heavy weeks. Okay, so it's a panic, whoosh. So it's solid, and look at that. That's a floor on a weekly basis. 1, 2, 3, 4, 5, 6, 7 weeks. You can argue 8 to 10 weeks of hard selling. The bears were trying, and the bulls said, nope, 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 get out of here. Okay, so right here again comes into play. And right here again, this is an important flip right there. So this level is definitely important. We picked right. So I want to hide below it if there's premium. I feel like if I sell premium here, put spreads, they should be well defended this year. All right. So having said that, another thing I can look at from these 2 candles is the fact that they are doji-ish, meaning you can hardly see any body to it. See how there's a body to this one? Means they opened up here and they closed down there. Emphatic. Where here, this candle right there, this one right here, they opened right here. They tried to rally and failed. They tried to sell it off and failed. They came back at the end of the week and they said, you know what, we have no clue. Let's just close it exactly where it opened. That was an indecisive candle. So the selling was indecisive. They did not have conviction. And then sure enough, that was the absolute bottom. Okay, so these are my thoughts on Johnson & Johnson. It's a viable long with a tight stop, meaning I should put my stops somewhere below here. It depends on how strong my gut is. This would be a good place. This would be a really tight place. Now, there are some people that like to trade it faster pace. Then you have to change the time and look at an open gap here and set your trigger here and here. But this is on a 1 hour chart. Nick signing out.